Good morning, guys. Welcome to this Friday, March 21st. And kind of a busy week. Yesterday was a nice little roller coaster going on after the Fed announcement from Wednesday. But today, the overnight, just a little bit to the downside. Not any major moves. You're still holding in this upper area of this low distribution. So we'll see kind of what kind of a day we're going to get. The The news this morning is non-existent. The only thing we do have today is options expiration, so quadruple witching going on. So let's watch for that. Usually add some volatility, some odd runs back and forth is usually what happens. But just be mindful. No real news to drive the market. Just options expirations is what's going on this morning or this morning throughout the day. So starting off today, diving into the ES. We are holding above this 56.70 area so far. We've been going back and forth. We've probed down to the 56.50 a few times, so I think that will be the edge to watch for potential issues on the short side of things. Other than that, I would start off range bound. I would start looking to buy up to resistance up to the 57.60s. And I would look to buy weakness down here to that 56.50. So like a 100-point range we're working in. So in the bigger picture, I think we are kind of building value right now, around about this area, the 5700s. And I would be looking to buy, as I said, down to the 56.50s, that lower support area, and get short up to the 57.50 to 60s. And then we'll see if we get a training day. We'll probably take out one side or the other. So, so initially looking for short setups against the 57.15s, 57.25s, 35s, 45s, up to the 60s for rotations back down, and looking to buy against support. At this point, support 56.85, 75. 70s, 55s, and the 50s for rotations back up again. If these two support areas, the 56.50s and the 60s come out, then I think we are in trouble on the downside. And the same thing on the 56.70s, 57.60s on the upside. I think that's when we start looking at maybe a little breakout to the upside. So fairly straightforward approach this morning. Given the volatility back and forth, we had some attempts to take it higher, which failed. So far, we haven't seen any major selling based on that. But a few, 1, 2, 3 attempts now to take out this 57.60 level. And so a little bit of weakness based on that. A triple top. We may very well see a pullback based if they can't take this higher. So at this point, the short side, if most likely going to start dominating if these two support areas at the 56.50s and the it's almost like 58 to 60s on this part. If these two support areas comes out. So the lower one is 56.50s. The next one up is 56.58, 57.58. But these two support areas, they came out, I would be worrying about the short side of the market. And either one can hold on the way down. The only concern I have is that triple top from 3 times trying to take out the highs, and we can't take out the highs at this point. And since we don't have any news to drive the market, chances are we're going to start range bound and probably go back and forth here quite a bit. But watch that upper edge, the 57.60s, that comes out. I would start thinking about the long side of the market a lot more aggressively. There's one level above that up here at the 57.70. They probed that once. They couldn't quite make it up there yesterday. So there could be a short trade up there at 57.70, but I would probably be on the long side of this above that 57.60s and see how far they can take it. So starting off range bound, looking to fade the edges. Initially for short setups against the 57.15s, 57.25s, 35s, 45s, and the 60s for rotations back down. And looking to buy against the 56.85s, 56.75s, 70s, 57, 58s, and the 50s for rotations back up again. And as I said, they start taking out these two lower support areas, the 56, 50s, start thinking about the short side at that point. Chances are we're going to see a move lower here. And that would be my bigger concern. They're down here probing that support area that comes out. We could very well see another retest of these lows. But so far they've been able to hold this range for a few days. So it's probably anyone's guess if they're going to have enough strength to take this higher, or if they're going to see another probe to the downside. And quadruple witching, yeah, we'll have options expiration, so there's going to be some churning back and forth between strike prices. So that's kind of what we have to look forward to today. But non-used to die in the market, starting off range bound, looking fading the edges fairly equally, and then watch those upper and lower edges for potential directional moves. All right, that's ES, bonds, and NASDAQ. The bond market. All right, probably heading back up a little bit. So they were up here pretty good yesterday, probing this upper edge at 118, probably all the way to 1820s. So on the bond market, that's taking out that upper edge and really starting probing into this upper area. Now they backed off pretty hard into the close, and then the overnight took it a little bit lower to the 117, 14s. Now they're right back up again. So we'll see how strong this is. But if the prices starts heading higher, that means the yields are coming down, and I think that would help the stock market at this point. So I don't think this is a flight to safety at this point. The market is not, the index is not selling off by any means. So if this is really a more of a structural change in the bond prices, and the yields are going to be coming down on a more permanent basis, that would be good for the stock market, at least the small and mid cap stocks. So I'm starting off from the long side. If they trade down below here, the 1726s, I would probably take off that long bias and go back range bound, maybe down below the 20s. So these two support areas, looking to buy against them, but if they trade below them, I'm going to take off that long bias and going back more range bound. And below the 1714s, so yes, they then are going to look for retracement trade back down a little bit on the bonds. But initially, given the little strength in the overnight, starting off and looking for early strength, and let's see if the hypothetic can take it. So looking to buy against that 118s, it's 1725 to 26 and 1720s for rotations back up. And looking for short setups against the 11809s, 11816s for rotations back down. Maybe up to the 11823s, 2324s, but I think I'm going to be on the long side. I'm going to be a lot less aggressive on short setups here if they start trading higher. But these three areas could certainly set up a short trade for you. So we'll see. Bond market looks like it's trying to trade higher, and yields looks like they are coming down a bit. And that would be helpful for stocks. On the NASDAQ, also holding in this upper range, but they have been they are still holding below that 20,000 level. So they have the hardest time getting up above it. And this ledge right there at 19,700. So between 700 and 20,000 is kind of where they've been trading. So 19,700 and 20,000 been trading in this range. So I would start off range bound. I would look for potential move to the downside below that, and I would give it below this high volume area. You see that volume edge below it at the 660s. At that point, I would key in on the short side a lot more aggressively. So a little bit below that 700 level. So we have that low here at the 660. So if that 660 area comes out, I would be on the short side of this a lot more aggressively. But initially looking to buy weakness, 760s, 730s, 700s down to that 650, 660 level. Rotations back up. And looking for short setups against resistance, 860s, 900s, 930s, 20,000s, 20,030 and 20,070s for rotations back down again. Now, if they trade above, I would give it the 20,080s and the 130s, these two resistance areas. it starts trading above that, I think we have maybe a directional move going on. But initially, looking for short setups all the way up there, and then starting off pretty range bound. Then let the market show us today if they're going to be wanting to trend or if they are going to be going sideways. And sideways in this range could be freaking trade. It could be looking like pretty good runs. So when we have volatility and range like this, they could certainly move quite a bit. So if they start taking out that the 900s here, the London high, I would probably be looking maybe look for a squeeze to the upside, but still looking for shorts against the 930s, the 20,000, 30s, and the 70s. Just be mindful that you don't buy into right to the resistance area. So if they start taking out the 900s, maybe hop on a long trade, maybe cover at the 930s. If it works out, then they take that out. Stay long until you get close to that 980 to 20,000, but don't hop on a long trade right into the 980 to 20,000. Don't hop on a long trade right into the 930s. That's going to get you right caught in a shitty spot. So it's always the biggest picture. That's why I keep the F2 open for all the markets I watch, because that keeps you out of that. And when you buy into resistance, sell into support, that's just a classic mistake. So you don't want to be doing. So starting off, looking to buy against the 760s, 730s, 700s, and the 650s for rotations back up. Looking for short setups against the 830s, 860s, 900s, and the 930s. Above the 900, 930s, I'm going to be looking for a potential move higher to test these upper areas. But 20,000, 20,030, and the 80s, the three resistance areas could certainly be nice short setups and setting up against them. And they've been the same story with NASDAQ. They've been up here 3 times trying to take it higher. And always keep that in the back of your head. 3 times they've been trying to take it higher. If they can't, and they backed off the 3rd time as well, and if they can't get back up there again, chances are we may see a test of the lows, maybe even lower as a next step here. So we'll see how it develops, but that's just something you have to keep in the back of your head. All right, so that's bonds and the NASDAQ. So on both these and NASDAQ is starting off pretty range bound, and then we have it in range, which we are going to be fading. And then if they trade outside of that range, we may have a directional move going on. On gold, not much happening on gold. They're pretty much holding in this range. So they had a pretty good move out of the middle on gold. I'm gonna go send out an update this today about the rollover. I think it's the 27th. They roll to the next expiration. But gold looks like they found an attractor spot here right now at 30,040s. They cut off the buying day before yesterday. No, they extended yesterday. They looks like they were down here probing the 3025. So this could be a day where that second pullback also cut off the selling at the 25s. So we'll see how it pans out. But I think they're pretty much settling in right now at the 30,040, 41s here. So I would be looking at the trading in this range, looking to buy weakness against the 40s, 32s, and the 27s for rotations back up, and looking to sell strength. Not the 46s, I'm going to be a little bit less aggressive on, but the 54s, the 58s, and the 64s for rotations back down again. So starting and trading in gold in a range. If anything, I would favor the long side. I think we're still in the move out of the middle to the upside. They cut off the buying so far. We cut off the selling maybe today and the overnight, and then we'll see if they stay range bound here, start building value. But it looks to me like we're going to have a distribution here centered around 30-40. So at that point, we'll know after today, I think, and probably enter stage 3 going into Monday, staying range bound. But at this point, they watch that lower edge, the 30s. If that comes out, I would start thinking about the short side. Last one I would be looking to buying against is that 25, 26s here. Now, if they start taking that out, we can see them retrace these single prints all the way down here to the 3000. So that could be a beautiful short trade. But you can see here, yeah, that's overnight. There was just one probe and then got promptly reversed after that. So that was an interesting one. So gold range bound trading to get started. If anything, I would favor the long side. Watch these lower edges. If they're going to start testing the 30s again, towards taking that out, I would stay on the short side and see how far they can retrace it. But then we are in that retracement stage again. And then oil pretty much range bound. They traded up a little bit. So risk premium on oil back on again, at least for a bit. And then at this point, we'll see. They haven't quite taken out this area, the 68. They probed above it to 68.50s, backed off. If anything, they'll trade back up in this upper range again, maybe even up test the 70s, but that's just retracing back up in this range. So we had a pretty good, as you can see, pretty orderly sell-off on oil to the downside. It popped here late in December, early January, and then slowly that's kind of coming down again. And this is all policy changes. I don't think that some of the production has changed. And as they get entrenched their new energy policy, this is going to keep coming down. So I would be favoring the short side on oil as often as I can. Just be mindful. You can get days like yesterday in between where they run higher, and so you don't want to be as blindly sell everything you see. You want to kind of have some sort of awareness as to where you're at in this whole big picture. All right. So that's oil traded I would start from the long side right now until they trade below that 67.40s or 50s again. So I'm looking to buy against the 67.70s and the 67.40s for rotations back up again. And if they take out 67.40s, just to go back on a short side right away and look for a retracement trade. So looking for that early weakness to get long for rotations back up again. But if they can't take out the highs, a retest that 68.50 could be nice. And if they don't get that, but they take out the 67.50s, look for rotations right back down again. All right, so that's oil. So I would start from the long side on oil, given the overnight and given that they're still holding on to that. And the gold start off range bound. Watch that lower edge. If they're going to keep retracing on the downside, you'll see them challenge that pretty much early on here. All right, back to the ES, and okay, there where we left it. So no news to drive the market today. It's pretty much options expirations. We have the outer edges on the ES, and just the last recap, the edges are up here 57.60s. They start trading above that. We may have a move to the upside going, and below that 56.50s, below that support area, we may have a move to the downside happening. And in between, just traded as a range bound market. And both ES and NASDAQ has a fair amount of range. So there could be the little runs in between, directional runs going in between there. But watch those outer edges, and then let's see how this whole thing develops. Alrighty, guys, we'll leave it there for now. And they say good trading. And let's see how this Friday develops. Alrighty, guys, you have a good one. I'll see you back at 11:30 for the next update. Later.